It was a strong day for mining companies, along with oil and gas stocks, after Australia's biggest trading partner announced it'll scrap quarantine requirements for overseas visitors. Despite that, the All Ords fell by 1/3%, with the big banks dragging the market lower. Lithium stocks and companies which supply raw materials to Tesla were among the worst performers. And that was after the electric car maker's share price plunged 11% overnight, on reports that its Shanghai factory will be closed for much of January as COVID infections surge to record levels in China. Tesla is facing its worst year on record, having wiped out much of its share market gains since COVID first struck, which is a shame for its boss Elon Musk. His fortune has dropped by more than $100 billion since the year began, as much of his wealth is linked with Tesla. Some say he should spend less time on Twitter and stick to making electric cars. Meanwhile, it was a mixed bag across global markets. Hong Kong's main index, the Hang Seng, rose by about 1.5% as China's economic reopening appears to be happening sooner than expected. But Wall Street's tech index, the Nasdaq, fell quite significantly. Turning to currency markets, the Aussie dollar went up to 67.5 US cents. And finally, the price of oil and iron ore also experienced a decent rise, while gold has jumped to its highest level in about 6 months. And that's finance.